Hello, everybody. Welcome to another weekly market news video. Today is Monday, 22nd of March, and we have experienced some another interesting week on the markets as there was a FOMC meeting as a key event from last week, which set the tone for stock markets for the rest of the week, and as well as some for currency pairs, forex, especially US dollar was influenced by the event. As we are looking right now for at the chart of Nasdaq, you can see that the FOMC meeting was quite negative for the markets as the bank was able to reassure the markets that low interest rates are here to stay, even if the inflation overshoot the 2% inflation target. Even the bank projected that this year inflation could rise up to 2.4%. That doesn't give the chance. That doesn't give bank chance to go lower raise interest rates. So the main priority for a bank is still job market, to get people back in the jobs, drop unemployment rate, and inflation is just a secondary target, which will not be controlled by any measure in the coming years, at least until 2023. So at the beginning of 2024, it will be somewhat a big surprise if Fed goes and raise interest rates. Anyway, it was not that positive for the markets. The meeting, as the upcoming press conference of Governor Jerome Powell was very negative, as there was a question from the reporter who asked Jerome Powell if there is any measure to be considered about the rising yields from treasuries. And there was not some answer that the market was looking for. So the yields did not take long to react, and they were rising. You can see above 175, which was a milestone for the yields. It was many times the level which was repeatedly taken in consideration, as the yields above 175 was somewhat a catalyst for some bigger correction on stock markets. We did not wait for that very long, but especially growth sector, growth stocks, technological stocks were under pressure. You can see the red candle here on daily chart, which pushed the Nasdaq about 3% lower. The negative sentiment did not stay that long, as you can see the pin bar here, which is technically a very interesting opportunity for the market right now, as we have created. Like I said, we are right now bouncing from a very strong support level, as well as 100 daily moving average. Here's a pin bar from Friday session. Today we are rising. The yields are getting lower. They are kind of stabilizing. We will see how it will plays out when the U.S. market will open. So very interesting market opportunity to jump into the market here and look for correction from previous losses. So that's looking quite positive. On the other hand, you can see Dow Jones, S&P 500, which retreated from their record highs. The negative sentiment kind of stays here. Even for the week, we have managed to close negative, which is kind of surprising after those many days of surging prices of these stocks. You can see some technical correction, obviously supported by the higher yields from U.S. treasuries. So the sentiment is somewhat still looking for some clues about the future of the yields and the future of the interest rates in the economy. as the vaccination pace speeds up in US, as in Europe it's still lagging. So we will have to wait and see how especially like I said, the yields from 10 years Treasury will be probably the main catalyst again for this week of stock markets and on US dollar. Like I said, more or less US dollar was influenced by the events not only on stock markets, as the US dollar was surging with falling stocks, but as well the higher yield creates a bigger demand for US dollar and US treasuries, and it's a little bit more um, interesting than with the low years. So higher yield is quite interesting for the investors, and they were able to jump back in to US dollar. You can see the double top here. We broke the neckline of 119 today. I mean, the beginning of the day, we are kind of getting the correction of these losses, but we will see how this thing will play out. Like I said, the yields are right now a little bit lower than they were on Thursday and Friday. If they manage to stabilize, we have some chance of correction on US dollars. So Euro, GBP, Canadian dollars, those currencies can be rising, and obviously even the stock indices can go for some gains. So like I said, not very interesting week for currency pairs, as the US dollar was again one of the main things to move the markets. You can see we are here ranging for another week, so no trends here, even with the vaccination process a lot more quicker than in Europe is in UK. So we will see how this thing will affect possibly the markets, but as you can see right now, we are still looking for some further catalyst for some bigger move up or down. So like I said, we are here ranging. The same thing on the euro. Canadian dollar is a little bit different. Last week, you can see again, we were able to go to the highest level in Canadian dollars since the beginning of 2019. I mean 18, I'm sorry. And here again, US dollar was able to get some gains back and even close the week a little bit higher. But overall, this currency pair is influenced by the things that are happening on crude oil and crude oil WTI, which was under some heavy pressure last week, as we were seeing some pressure from the especially much weaker outlook for demand in US and in especially in Europe, where the lockdowns are probably going to get extended. Not even in Czech Republic, but in Germany and some other major economies, perhaps France, and this will inevitably have some impact on demand for oil. So this is something that the market participants are working with, and they are working with it in a way that the market is probably not as positive about the future, about the short-term future outlook as they were before. So, like I said before, it's only about the supply. It's not only about the supply. As the lockdowns keep coming in, they keep getting extended. So that might be the thing that puts the pressure on the market in the short term. But in the long term, let's say in the middle of the April, we will see how the OPEC will react with their adjustment of the policy and production cuts for another month of May. But if the things will stay at the levels that they are, so the production cuts perhaps that they get extended, and the demand surges from European countries as the lockdowns due to the better weather will get loosened. We can see oil again be trading around $65 a barrel for the gold WTI. But we will have to wait and see how the market will react in the short term, especially as the lockdown, like I said, might get extended. For the market of gold, not really interesting week that has happened. Something similar to USD JPY, as we can see. We can look just right away. The market, I said it before, I'm going to say it again. I'm not really expecting any big moves here and there, even up or down. I expect the market to be around 1700 and 1760. Where we can consolidate for several weeks, as there were some steep losses on gold since the beginning of the year. You can see the bounce here from technical 1700 level, third touch of the trend line. So technically there was some space for correction, which has happened already. The market was going sideways for the most of the week. Not really anything particular to be expecting from gold in the upcoming week. It's more or less going to be in the terms of US dollar, how US dollar is going to be performing. I would closely watch also the USD JPY, as you can see the last week performance of gold looking pretty similar to USD JPY. You can see consolidation here going sideways for most of the time. I draw here somewhat of a descending triangle, which can indicate that the price can go even lower to lower prices, which would make sense, as the market was surging quite a lot, and right now is going sideways and can go even to somewhat of a little bit correction. Let's look at the economic calendar, what we can expect from the market, from the events this week. You can see Jerome Powell is going to have a speech. There are some housing data from US. On Tuesday, we have job data from UK. You have another housing data from USA, as well as the testimony of Jerome Powell. On Wednesday, we have the CPI data from UK, several market PMIs, flash PMIs from European countries, another Fed Jerome Powell testimony. Not really all of them are going to have a huge impact on the market, but anyway, look out for that, as well as Christine Lagarde's speech. Again, nothing really interesting to be expecting from these speeches, as we don't really expect anything to be said. There's not much to be said at this point. Everything took this place. Everything is all the measures are implied. The bond purchases are still going on. So not, like I said, not really anything that will change the whole structure of the market. But there can be some reaction. So another speeches, there are several of them. I don't really expect them to at each of the speech to happen something that will completely be different from the previous speeches. So it's not that interesting and that important as the macroeconomic calendar seems to show us to be. But then we have a GDP data for we'll see for this, if it's for Q1 or the revision for Q4. Jobless claims and retail sales from UK on Friday, IFO climate from Germany, and PC index, which will be interesting for the last month from US. And this will be it for today's for this week. So like I said, yields are still #1 priority for the markets. We'll see how different markets will react, stock markets, commodities markets, and even the currency pairs. So this will be it for today's video. Thank you guys for watching. If you have any question, leave it down in the comment section below the video, and I will see you next week.